Hey, this is Matt from InvestiQuant. Today is Monday, February 22nd, 2021. And this morning, the markets are starting off weak. We are trading down below the lows from last week. We had a bit of a weak close on Friday that's being followed up in the overnight session with a strong range taking place to the downside. So what I want to do this morning is look at what has happened historically when you're opening up below the prior week's low on a Monday in a similar market environment. So let me go ahead and set this up and discover. I'm going to add all four instruments here. The setup is going to be based upon entering the market long at 9:30 a.m. Eastern Time and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Next, I'm going to go into the opening filter section, and I'm going to add that we are opening below the lowest low of the prior 5 days. So that'll put us below last week's low. So I just need to go to this opening area, scroll down to where it says open below the lowest low of the prior 5 days. That'll put us below last week's low, since we're going to be looking at this specifically on a Monday. So if I go in the calendar, hit equals next to Monday in the day of the week category. And then lastly, I'm going to put us in a similar market environment where we are below a 10-day simple moving average, but above a 200-day simple moving average. Now I can click view results. And here we go. These are the results of going long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when it is a Monday and you're opening below last week's low in a similar market environment, which is below a 10-day simple moving average, but above a 200-day simple moving average. Historically, dating back to 2003, the S&P has seen this pattern take place 31 times, the NASDAQ 27 times, the Dow 28, and the Russell 19. If you look at the win rates on these, they're fairly mixed. You've got the S&P and the Dow at pretty neutral win rates, where the S&P is at 48%, the Dow is at 54%, but the NASDAQ and the Russell are weaker. The NASDAQ's coming in at 37% and the Russell 42%. So none of these are strong. A couple of them are weak on the win rates, and that's just saying what percent have closed above the opening print. If we look at the average win, average loss, you can see the average loss is larger on all four instruments. So the S&P has a larger loss compared to the win, so does the NASDAQ, as does the Dow and the Russell. So all four of them have seen larger average moves to the downside compared to the moves that take place on the upside. And if we look at the win rates, 2 of the 4 are weak, the other 2 are neutral. So this one looks like, although the win rates aren't all that impressive, the bigger moves have taken place to the downside on this pattern. So hopefully you found that helpful. Good luck, and we will see you next time.